back again. I am a software developer and an investor. I have a couple of businesses. One is software related, and the other is Bitcoin mining related. And so that's what we're going to talk about today. Like an overview of mining for people that are interested as financial professionals or investors want to understand it. And I know it's a topic that comes up a lot with new Bitcoiners because there's something there that they want to understand. It's not central to Bitcoin per se. Like plenty of people are going to, for example, people can buy gold jewelry and not know anything about how it's mined, right? That's not very important to the gold aspect. But from a business point of view and from an investment point of view, it represents a certain class of opportunities. Hey, Stephen. We'll just get right into it. Bitcoin mining as an industry reached a sort of peak revenue in 2021 of $16 billion. So it is a significant industry. Mining is a cash flow investment. So when you think about mining, it's about generating an income. But it has some caveats. The income is in Bitcoin while your expenses are generally in dollars. And so you're going to be a seller of Bitcoin if you're a miner, generally speaking. And there's some things to cover on that. But what that means is that your margins will expand and contract with the Bitcoin price. Bitcoin, I covered this in the initial presentation. Bitcoin generally trades at a premium to its production cost. And sometimes when the market is very low, or let's call it the average production cost, because every producer has their own cost structure. And so all the producers are at various price points. But if you considered the whole industry as a whole, there's probably some kind of average production cost. And my guess is that that's probably close to the 200-week moving average. So you can say that when we're under the 200-week moving average, as we were for several weeks or months, the producers are in trouble. But when the margins expand, they expand quickly, and there can be some investment opportunities in that, and the income can be substantial. The primary operating expense of a Bitcoin miner is your energy input. So you're converting energy into computation. The computation is part of the Bitcoin mining process. I can get into that. But it takes a lot of power. And so whatever your source of power is, you have a cost associated with that. Who mines Bitcoin? Well, I think you have all different types of entities are mining Bitcoin. Public mining companies, you can find their stock symbols. There's about 10 or 12 of them that you can speculate in if that's what you'd like to do. There are many large and medium-sized private mining enterprises. There are oil and gas companies that are partnering with some of these guys and doing mining. You have wealthy private individuals and family offices that are running mining operations. You have home hobbyists and small businesses that do it. You have anyone with cheap or excess energy is probably, a bug gets in their ear, or they think, maybe I should mine Bitcoin with my cheap energy. So those are people that look at it. When I wrote this in 2022, about a year ago, we didn't know if any governments were mining. Now I'm pretty confident that there are a number of them mining. 30% or some number is, of the mining, 30-something% of the mining is probably taking place in the United States. But it is globally distributed, and it's in all the continents except for Antarctica, and and it's in obviously very, very many countries. So it is a global business. Why do people mine? Well, it can be very profitable. I would guess most miners are operating somewhere in that like 10 to 80% margin, depending on the price. This one, they're not 50% margins currently. So that's probably closer to like a 20% for the ones that are doing things right. They want to accumulate Bitcoin. Some of them do mine to accumulate. Many of the public miners will brag about their HODL stack, you know, how much they've been able to accumulate and hold on to. And there's one, if you're on a Bitcoin standard, like from an accounting point of view, you really haven't made a profit until you've got Bitcoin, right? And so your accumulated profits are the Bitcoin that you can hold on to. So one way to measure that would be the HODL stack. Say, okay, well, you know, as a miner, we've mined 100 Bitcoin, and that's our accumulated profit. But when they kind of get upside down in a bear market, oftentimes they have to sell off that HODL stack, and so it really is a measure of how well run the company is if they can hang on to a good amount of Bitcoin, because that's hard to do. But most importantly, mining is one of the only businesses that can generate Bitcoin cash flows. So if you're looking for Bitcoin cash flow, there isn't, you know, unless you're selling products for Bitcoin and convincing people to give you their Bitcoin, there aren't too many businesses that you can get into that will give you a cash flow or stream of Bitcoin other than mining. So how are people mining? Well, many people get into mining through hosting. That is, you can host with a provider that will rent you space. So you buy some machines like this, and they put your machine in a rack, and they charge you an electric bill, and you don't have to worry about, you know, too much. It's there, and they take care of it. But you pay by the kilowatt hour, and you're going to, today's hosting rates are generally 8 cents and up. And so your profitability is marginal when the price is low. But many big companies, including some of the biggest, choose to actually contract the entire physical infrastructure part to a host. So for example, Marathon Patent Group, I believe, is one of the biggest. They were at 100% hosted setup. And I don't know if they're still there or if they own some facilities themselves now, but so it's not just retail that does it. It's also big boys will make a business decision to say, no, we don't want to deal with the details. We just want the bill. And we'll handle the financing and everything else. Industrial scale mining, this is where we're in the hundreds of megawatts. So when we talk about like how big is a mining facility, people really get into megawatts to measure them. And this one here is the Riot Windstone facility in Round Rock, Texas. And they have built almost a gigawatt there, and they're building another one of similar size in another location there in Texas. So there are different kinds of mining setups. There are container mining. These go down to from 80 kilowatts or 90 kilowatts up to tens of megawatts. Some of them are built for mining on natural gas. So you can use natural gas as your energy source, and those get deployed right in the field near the well sites and the pipeline facilities where the gas you can buy the gas cheaper than you would buy like a retail gas. Now you got the hobbyists, the home miners. So the nerds, who build stuff in their houses, they do things like this. Some people will heat their pools with the mining. That's really good. I know a guy in Texas who rented an apartment in a building where the electric's not metered, so it's just in the rent. So he filled the place with miners.